FOMC was reported today, guys. Came in at 4.5%, the US interest rate decision. 4.5%. Forecast was 4.5%. Previous 4.5%. Nothing surprising. You look at the price action, it kind of reflected that with the up and down action. Didn't really go anywhere. Now, I tell you guys, Uncle Charters, I do not trade the news. Okay, I trade based on the price action, but the news does serve as a catalyst. Okay, now in my opinion, the market is gonna do what it's gonna do. But a lot of times, the market makers, they love to use the news as an excuse to make something happen. They were gonna push it up $10, $20 to the upside or to the downside, but then they like to use the news as an excuse. Oh, because of this. Okay, but either way, guys, I trade based on the price action, but the news can serve as a catalyst. Now, something that stuck out to me, because FOMC was released at 2 p.m. Eastern time, but Uncle Powell spoke after that, a little after 2:30 p.m. Now I'm going down the news feed here. Something that he said right here, breaking Fed Powell. We won't make progress on goals this year if tariff stays, okay? Now, whatever you guys feel about the tariffs, whether you guys support it or you're against it, Jay Powell said we won't make progress on goals this year if tariffs stays. Sound like a little bit of fear there. But you know what? A lot of people have said, and I'm sure you guys have heard this as well, is that the market is forward looking, all right? It's forward looking. I don't know if I'm saying that right, but it's forward looking. What does that mean? Guys, I know the tariff is a big thing, and they make it sound like America versus the world, America versus China, right? The news, they love to sell propaganda, get us all emotional. That's what get them views, guys, okay? For all we know, the people in China and in our country, America, are all civilized. Everyone just speaking friendly. They're looking to solve problems, looking to make a deal. But the news will make it sound like we want to fight each other, okay? Propaganda, I tell you. So with that being said, don't be too surprised if we work things out with the tariff situation and then the market skyrockets, okay? I'm just saying, be prepared for anything. And no, I do not trade based on the news, but like I said, the news can serve as a catalyst. And that catalyst can come any day, okay? It can come any day. Now, yes, we've been chopping, we've been flagging, all right? But I believe that we are consolidating, we are building liquidity for a reason, and it's going to eventually lead to a trend move, and it's on us to be prepared, okay? Now, we've been chopping. I mentioned we lost that macro level around 563. That was my golden zone. Still treating that area as a sell zone, still did not recapture it. You can also see that we still have not lost that fib level around 558, and we still didn't even test the 50 DMA as a support, okay? So we can go either way. But as sheep style traders, remember, we got to know the levels, know the setups beforehand, and trade it unbiasedly. So if we are to trade this bullishly, 563, the golden zone, must recapture. Because remember, we cleared that level Monday, we lost that level Tuesday, and today we still close below it again. So if we recapture 563 and we start popping up 560, what level I got? 565.5, 567. I have a fib level at 568.7, then 570. We still have that 200 daily moving average at 573. I'm telling you guys right now, we recapture 563. We clear 565.5. We are getting a bounce. All this consolidating, all this flagging is going to lead to the test, the retest of the 200 daily moving average. Okay? That could be a $12 to $15 pop trend move to the upside. That's the bull case. Now the bear case, if we stay below 563, I'm gonna give the bears the benefit of the doubt. We're either still in the chop phase or we're gonna drop some more. Okay, now 550, well, we're above 560 right now. So 560, 558 are support, and below that is 556 and 554.5. 554.5 is very important, guys, because that is the 50 daily moving average. Okay, if we break down that moving average, okay, I would trust the rejection from the 563 fib level a lot more, and I would believe it could drop all the way down to below 550. We should be able to test 548.6 to the 547 zone. Why? Because of my uptrend line. I believe we can go for that third test if we lose those support levels. Guys, as always, I am encouraging you guys to look to react. Okay, even though the market chopped today, there was still some good moves, tradable moves. Look at how this candle, this 145 candle, broke down 560 on the 15-minute chart. Right there, you guys can see it. And it pushed down all the way down to 556. And then we bounced off of 556. We recaptured 558. False breakdown setter gave us a nice bounce. Level to level style. There are definitely trading opportunities. But if you're looking to swing trade calls above 563, swing trade puts below 558, and 554.5 below the 50 DMA. Now, as far as swing trading puts below those support levels, I would swing it down to the support line, okay, which is around, like I said, 548.6. Okay. Now, if we're talking multi-week, all right, you guys, maybe you want to buy puts for a month or two out. You need the breakdown of this trend line, okay, with your stop loss above it. Breakdown of that trend line. This could be a massive breakdown of a bear flag, okay, macro level. And that should send us to a multi-day, maybe multi-week leg down. Okay, guys, you got my levels. Now it's on you guys to trade it unbiasedly tomorrow. Triple Q also flagging as well. Today's close was at 483.3. A small little recapture of that 483 fib level, okay? I mean, a small one, but still technically a recapture. And if there is follow through on it, I do have next resistance at 484.5, 486, and the fib level at 487.8. If those levels recapture, we're likely going to retest the 200 daily moving average at 491. And my opinion is this low that we had today, if we go start clearing those levels, this low that we had today could be a higher low, and the next test of the 200 could be a breakout. All right. Now, if we break back below 483, guess what? False breakout setup. That should send us back down to 481, 477. Below 477, I would definitely be bearish. And I think we could drop that all the way down to 473 and 471.6. All right. That's around the 50 daily moving average. And below that, based on this uptrend line, I have 466. Guys, there's going to be some beautiful moves incoming. I feel it. The market does not chop forever. Everybody's feeling down. Well, not everybody, but a lot of people's feeling down because of the lack of volatility. Okay? But remember, the chop phase leads to the trend phase. Be patient. It's coming. All right? I think it was a little volatile. FOMC brought the volatility. It just wasn't a trend day, guys. There was volatility. It just wasn't a trend day. I'm telling you guys, the volatility will come and the trend day will come. We can't chop forever. Now, speaking of trend day, we've been consolidating and chopping under that 115 level for about a week, a trading week. Today, guys, we got the breakout, okay? Now, that is a breakout, and it does trigger swing calls. It does, or swing longs. But we got to be safe, all right? One of my Discord members, Vav, he write his name, Lowball. Now, it was a very cool quote. I don't know who he got it from, but it was a very cool quote. He said, trade the risk, not the reward. Okay? Trade the risk, not the reward. I love that very much. It goes with sheep style trading for sure. Now, if you did buy calls off the 115 breakout, I just want to say, in my opinion, that is not a bad position. Okay? Now, the RSI is overbought. That might make you a little nervous, but price action is the shepherd. As long as above 115, I recommend holding your calls 118, 119.6, 121, and 122.5 are targets. Okay, now if we break back below 115, don't get angry. Remember, you're a professional trader, you're a master trader, you're a money magnet. Don't get angry. Respect your stop loss. I respect the trader that respects his stop loss, okay? If 115 failed, cut your loss, respect your stop loss, don't be mad. Why you don't want to be mad? Because you've been trading for a long time, you've been trading for years, and for many years you have seen that setups come after setups after setups after setups after setup. If one does not work, then the next one will, and reality will bend to your will because you've seen it so many times. You are no ordinary trader, my friend. Okay, you are no ordinary trader. So don't get mad if 115 fails. You cut your loss and you reposition. You restart from scratch and you play the next setup because you've seen it. You've seen it with your own eyes for many years that one setup doesn't work, the next one will. Okay, they're a dime a dozen. As long as above 115, stay bullish. Hold your calls. 118, 119.6 or higher is in play. If we drop back below 115, cut your loss on your calls. Now you'll have two choices. You can sit on your hands and just whatever, or you can reposition and go short. Okay, play the false breakout setup. Trade with the traps. If that breakout does not work, then play the false breakout. Below 115, look to short with 113.5, 112, 110.7, and I believe we could go hit 109 and 107 area below. Now below 107, I would be bear bias. That would be a breakdown of the bear flag. You feel me? And here is Tesla still chopping. That M pattern, is it going to play out or what? Still didn't lose the 275 level. And we still didn't lose the middle of the M pattern, which is around 270.7. Still didn't lose it. I need to see 275 fail. I need to see 272 fail. I need to see 270.7 fail. Below 270.7, bears are in full control. Now, despite not losing those support levels, bulls aren't capitalizing here. It's a bit frustrating, but that's how the chop phase go. All we can do is be ready. All right, above 275, look to long above 277 and 280, especially 280. That should send us back to the top of the chop range, which is around 290 to 292 zone. And above 292, I would be bull bias. Guys, look to short below 275 and 270.7 and look to long above 280. That is my plan for Tesla. Coin is still looking bearish to me, guys. However, more follow through is needed because that fib level support around 193 is still holding. Okay, contact is still bearish, but that support is still holding. So 197, 195, and especially 193 must fail as support. If it does, you go short. You go short, and this M pattern could be playing out. Otherwise, if we bounce, this could be not an M pattern, and instead a different consolidation pattern playing out. Maybe a descending triangle pattern here, okay? Either way, if we get above 199 and 200.5, you want to look to long, okay? Look to long with 202. What levels I got? 202, 203.5, 205, and 207. And above 207 is breakout mode. I would be bull bias. VIX. Speaking of breakout mode, I mean, I had a feeling because when we got out of that wedge, it was not a strong breakout. I wanted to see a big body green candle. We did not get that. I thought with FOMC, maybe we get it. We did not get it. I was wrong. And instead, it looks like a dead cat bounce. And I tell you this, below 23.6 and loss of 22 would definitely confirm this being a dead cat bounce. And if this drop, this could mean the SPY is popping to the upside. My bearishness on VIX right now would be invalidated if we can actually get back above 25 and 26.5. Those are the levels I'm watching. Those are the levels I've been watching. And if we clear, I'll be bullish. Otherwise, VIX is looking bearish. Guys, thank you so much for spending time on Uncle Charters and watching my video. I hope you found value in it. All I want to do is provide value for my fellow sheeps. Love you guys. Bye.